Hi guys, welcome to today's video, which as you can see there is based on do we want to be catching a falling knife? Now, I know the market has been incredibly choppy the last few days. There's many of you out there that will be holding positions, wondering what's going on, whether or not you should be buying the dip on a lot of these stocks that are perceived to be discounts. So what I'm going to do is just kind of walk you through what we're seeing in the market. I'm going to back everything up as always, just with a full analysis. And after the nice messages that I got yesterday after yesterday's video, I thought I would just follow it up again today. But if this is your first time here, please do pause the video. Just make sure you are comfortable with that before proceeding. And just to say as well that I'm registered with the CMT Association and I'm currently working my way towards my chartered status. So for those of you that are maybe new to what I do, technical analysis is my thing. I'm not much of a fundamental guy, so if you're looking for technical insight, this is probably the place to be. So where I really want to start before I get into the individual stocks is I touched on this yesterday about the seasonality chart for the S&P 500 going back 70 years. Now, what I was really highlighting is that September is historically quite a poor month overall for the stock market. It's by far the worst performer. And as we can see from the daily seasonality for September is we can see that it's actually towards the end of the month that things get a little bit dicey on the whole. Now, I did allude to it yesterday that I would be doing another video on this at some point during this week. If I get time, then absolutely I'll do that. I've already, I suppose, built the presentation, but recording it, finding the time is the issue. But that's certainly something to be aware of. Now, this is also the relative rotation graph. Now, what this essentially is, and I'd just like to point your attention to a couple of things here. We've got improving, leading, weakening, lagging. These are the sectors that are currently on a weekly basis the areas that are showing strength. So SMH is the semiconductor area of the market. That's a leading sector. We've got real estate, which is leading. We've got utilities. So these are all areas that we really should be looking to identify the strength within the market. A lot of you will be fixated on the same stocks. You'll keep going back to Apple over and over, maybe Roku, Microsoft. You'll be fixated on all these stocks that have maybe done well for you in the past, and you keep trading them over and over. What I would suggest is you're probably limiting yourself a little bit there, and you might want to consider other areas of the market. Now, if you do get value from the individual charts that I'm about to walk through with you, please feel free to subscribe to our channel, give it a thumbs up, comment, share it on social media, stock twits. It all helps to kind of get the content out there, and I really would appreciate it very, very much. But let's just dive into the charts. Now, first up, we've got the Dow Jones Transportation Average. Now, obviously, I think this is obviously a major index that we need to enable us to get a picture of the overall market. Now, breaking out of this pattern here would not be a bearish move for the overall market. So I'm very much hoping and looking forward to the Dow Jones Transports breaking out of that zone. And hopefully that will be a catalyst for other areas of the market to progress as well. Likewise as well, for those of you that don't really understand perhaps modern day Dow theory and the technical side of the market and the application of it, the Russell 2000 is a basket of 2,000 small cap stocks. And generally speaking, when the market is making new highs in the S&P 500, etc., we want the small caps to be participating within that move as well. It just provides us with a lot of peace of mind, because with the modern day Dow theory, small caps in the S&P 500 do tend to give us an overall indication of what direction the market is likely to go. For example, previously this year we had the S&P 500 making new highs, but the Russell 2000 was lagging way behind. What happened? The breakout in the S&P 500 failed, therefore the overall market dropped, and certainly I do believe, and this is something I highlighted months ago, we do need participation, in my opinion, with the Russell 2000 for the overall market to take the next leg higher. Now, I did touch on Microsoft a couple of times this week. Very clear support level in place. I think what we've seen here today is we've obviously had a drop. We've dropped into this zone that it has dropped into in the past. It's just an area that we just have to get a bit defensive. That looks like it's held as support again. So hopefully, if we see tech move to the upside, the triple Qs, etc., hopefully Microsoft will participate and move along with it. Obviously, breakout area, generally I think above 141 is probably where you might want to consider a new entry into the market. I'm not seeing anything that would make me bearish on Microsoft at the moment. I think we can still say we're bullish, but only just. Financials, I think, again, we've seen a heavy rotation in the last couple of days. A lot of the tech stocks that I'm going to walk through in a second, a lot of them have been declining, but we have seen participation from the financial sector. Stocks like Goldman Sachs, etc., have all blasted through today, and they're now starting to motor a little bit. Now, is it a short-lived rotation? Who knows? That's 100% down to Wall Street. We, as humble retail traders, don't really have much say in that. But what we can do is we can observe the technicals, because the technicals and price give us the sentiment of the market. And that is something that we absolutely can weigh up our decision making on. Nvidia, again, it's progressing beautifully as you would expect. Many of my guys are doing very, very well on Nvidia at the moment. The expectation is that this does start to move towards 195. If we think about the very first chart that I showed you right at the start with SMH being a leading sector at the moment, Nvidia is obviously a big semiconductor company and obviously aligned with SMH. So the expectation is that Nvidia should hopefully start to move. Weight Watchers, again, is currently testing this level here. If we didn't pick this up in my last two analysis videos, my guys have received a chart for this, and above this level here, and it's very much a stock that we would look to do a bit more due diligence on. And like any of the charts that I'm walking you through at the moment, I would always recommend for you to do your own due diligence. Make sure any of the charts fit your own trading plan, your own rule sets, your own systems. And if you are somebody that maybe struggles with your trading a little bit, then you can stick around for a minute at the end. Maybe there's something that we can do for you. I'm very much watching what happens with Ball Corp at the moment. Now, Ball Corp has obviously been a massive, massive winner this year. Obviously had a monster year, and we're pulling back to a logical level of support. So is this offering opportunity? Quite possibly. I think if we get a break below this level, that might be an indication that we've got a change of trend, at which point it very much becomes obsolete. But absolutely, if Ball Corp isn't a stock that's been on your radar until now, I would suggest adding it to your watch list. Do a bit of due diligence and see if it's something that you like the look of. I did highlight this one, and Starbucks is now broken below support. So I think with what we need to see with Starbucks, and I think the first thing to say here, any of you that are in Starbucks at the moment, you should have profit taken up here. I know hindsight's wonderful, but many of you, I'm sure, understand the round number concept. $100, it should have been profit taken. But if you're still holding, obviously a bit of a sticky situation, and there's obviously a tough judgment call to make at the moment. Micron Technology, very much looking at this one. This is one, again, a few of my guys are doing very well on at the moment. Very much looking for this next breakout. And I think if we get that move, I think there's a very logical 26.5, 27% upside potential. And we can see that, it has been moving recently. There's obviously been a few battles at logical areas of support and resistance, but price is going up, and that's really what we're concerned with at honeystocks.com. We like stocks that are trending, and Micron Technology is kind of trending at the moment. Now, I did allude to it at the start about the shift in the sectors. Now, there's one sector that has been absolutely beaten to death over the last 12 months, and obviously we can look at oil and gas. Now, they may become interesting once again. Again, it's not rocket science to understand that a lot of the oil companies advanced big time today, in the face of, again, huge declines in a lot of these momentum stocks that have, done so well for everybody over the last, 12 months. But it might be a situation where you might want to just kind of do a bit of due diligence away from the areas that you've been used to. We just need to look to the history of, I touched on this yesterday, some of the semiconductor stocks have just not made it back to their former levels of last year. So, catching a falling knife is a very dangerous game. I don't really see much point in doing that until, in the case of something like Ball Corp, where we get a logical level of support. It doesn't really make much sense to me, but we've all got our own styles, I'm sure. Nike, again, profit target was achieved this week. For those of you that are maybe still holding, I think that the next level that you would be looking to obviously, maximize profits would be in here. I think if you want to get a breakout new entry, I think above $90 makes a lot of sense. Again, a few weeks ago, I highlighted this one as a potential double bottom, and we might well be seeing that. The double bottom will only be confirmed if we get a break above this neckline. So this is a stock that I'm watching very, very closely at the moment. Apple, I think, obviously, announcement today with the new features, air quotes. It seems like they've done a couple of things with their camera. They've got a watch that you can use underwater, and not a lot else. But Wall Street's reacted favourably today, and I think that's all we're concerned about. And I did say yesterday that, Apple, Microsoft, those are the stocks that are kind of showing the strength. You wouldn't really expect them to get beaten down too badly if we are dealing with a sector rotation. So yeah, Apple, I mean, I would fully expect this in the face of an advancing market. I would expect this to start to move back towards testing its previous highs there. Now, obviously, Netflix was affected again today by the Apple announcement with their Apple TV Plus subscription service. I think it's maybe, well, in the UK, I think it's only £5 per month. I don't know what the US price is, but very, very cheap. And, I think with something like Netflix, just looking at the chart, it's no longer appealing. I know that, this is a stock that I get messaged about quite a lot. And again, my view from yesterday and, the last couple of weeks hasn't changed. These are the levels that I'm watching very, very closely. For those of you that I may be looking to buy, if we get support here, there's a case to be made. There's also a case to be made for shorting it below this level. So, that's something that you might want to consider. Those of you that are in Roku, I hope you heeded the warning that I put out yesterday, even at the weekend, actually, just saying, look, we've got a bearish engulfing candle here, and we've obviously got a break to the downside today, which was entirely expected. It doesn't matter if there's a news catalyst. I think what you just have to understand is that price does what price wants to do, and it's always amazing how the technicals always align with the news anyway. So bearish engulfing candle, complete breakdown today. So Roku's no longer appealing. Sorry guys, I know there's many of you out there that are looking to buy this dip, and lots of you will have your justifications for doing so. But you know, we're right in the middle of no man's land now. We're right between these two levels. You know, I would absolutely like to see Roku come down and hit 110, 109. You know, I would happily buy it there, but you know, I'm not looking to catch any falling knives. I'm not going to take any chances. Could Roku rebound from here and go on and create new highs? Absolutely, it could. But I think when you understand the philosophy that I have and you know what I teach and you know the overall approach, I've got an approach that's based upon optimal entries into the market, and that's just a style that serves you know myself and my client base you know very well. So Roku, again, not looking to catch a falling knife with that one. But Home Depot might fit the bill for many of you because it is a stock that is breaking out into new highs. It is trending at the moment. So some of you might want to focus your attentions here. Obviously, optimal entry was on this breakout here. It has obviously advanced, you know, $12, $13 since then. But you know, absolutely, you know, Home Depot is one that's moving, so I'll be watching that one very closely. Gold. Now, with gold, we've obviously seen a bit of a decline over the last 7 days. Now, the decline itself, obviously, we can see you know diverging momentum, and when we observe the technicals, it's very clear where we become non-bullish. I think I don't know if I would outright become bearish because I think the market still has the potential to move sideways, and obviously for gold to kind of chop sideways and maybe advance a little bit. But I am still very mindful of the levels. A couple of weeks ago, you know, I put out a YouTube video just you know detailing you know what stocks you might want to look at in gold. I did the same thing 3 months ago when gold broke out, and you know many of the stocks, the gold miners, etc., they advanced you know 15-20%, and you know lots of money has been made. But I think at the moment, I think watching these levels very carefully. Hopefully, this is what we see. If we see that, then we're going to see, you know, GDX, which, you know, as we can see, when we had this breakout here, it advanced beautifully. Obviously, clear profit to be had. And now it's just a case of patiently waiting for a breakout, I think, in GDX. You can apply this philosophy right across the board, not necessarily just to, you know, the commodity gold or that particular ETF. You could look to the individual gold stocks and so forth. McDonald's, somebody reached out to me today just regarding McDonald's. Again, a very logical here. Um, you know, we had this danger zone, as I like to call it, and this is a level that I feel like is going to be very key for McDonald's. I think if we get a break below that level, you know, it might be a bit of a sticky wicket, as we say in Scotland. Um, and absolutely, it's defensive time. It's a stock that's performed beautifully well over the last 7-8 months, but unfortunately, all good trends come to an end at some point. And I think what you certainly have to do is just understand where the trend is ending and where to maximize your profits. So yeah, McDonald's, it's no longer appealing, unfortunately. PayPal is it's interesting on two levels here. Okay, at the weekend, I was saying to everybody, look, bullish above 110, below it, not so much. Want to get defensive. We've obviously had a huge decline along with the overall market, but this is obviously a very key support level here. Now, actually, a couple of my guys have actioned positions on this in the last few hours, and you know, the thesis is quite simple. I mean, it's very easy to take this trade. You know, if you're giving yourself a couple of dollars downside and you can see a potential $10 upside or maybe $20 upside, it usually meets risk to reward propositions. So, PayPal is one that's interesting at the moment. Lamb Research, again, looking for this breakout above this key level. Obviously, as I alluded to previously, SMH is obviously a leading sector at the moment. Lamb Research, semiconductor company, makes a lot of sense to add it to the watch list. Trade Desk, yeah, key support levels. I think if we can get down here around the $200 mark, I think that's fine. It would probably represent a buying opportunity, in my opinion, just from what I know about the company on a fundamental level. But it's obviously more of a swing style trade. It's not a trade that I would personally look to action. There's many of the guys within my group that would probably look to take a position here, but I wouldn't be one of them personally. But it is a stock that I've been asked about in the last couple of days. So I think it's just a case of mapping out where the support levels are and just observing to see where support is, eventually found. OLED, again, mapping out the support levels. Really defensive here, definitely defensive here. And, below here, it's probably good night for Universal Display Corp. But in saying all that, guys, I think what you also have to understand is that despite a lot of your tech stocks being beaten down and a lot of you suffering out there, I think that's fair to say. The messages that I get, it does look like there's a lot of suffering out there, but tech is a couple of percent off of all-time highs, and that's something that you've just got to bear in mind. So although you're seeing, I suppose, your individual stocks that, some of them I've highlighted here declining, other areas of the market are moving and other areas of tech are moving. So, absolutely just bear that in mind. It's just about understanding where you should be looking. Southern Company, beautiful trend. Now, it's obviously up 42% or thereabouts this year, but look at that trend. Would you rather trade that, or would you rather trade something like OLED? And this is really what trend following does. It just helps you to take the stress out of trading, and that's something that's absolutely invaluable. And if Southern Company isn't a company that's been on your radar until now, I would suggest, just by looking at the chart, that you might want to do a bit of due diligence. Again, Cisco Corp, SYY, it's breaking out of a base dating back 12 months. So, the expectation is that this also starts to move. Now, obviously, there's many technical indicators that help us to facilitate that decision making. I obviously don't present every single technical tool on my charts because I like to keep my charts very, very clean for presentation purposes. But, absolutely, I think if Cisco Corp is a stock you like, you might want to do a bit of due diligence on it. I think that's probably the thing to say. But like I said before, if you have enjoyed this, please do subscribe to our YouTube channel. We do try to upload a couple of times a week. If you are somebody that struggles with your trading, if you are maybe looking for a more consistent approach, feel free to go and have a look at what we do. We are very well known technical analysts. Our work is featured in some of the biggest trading publications in the world now, which is obviously rather nice from my perspective, because it's taken a lot of hard work to get to this point. But if you genuinely do want to maybe learn a consistent approach, a technical approach, maybe if you want to combine technicals with a fundamental approach, we are super well-known educators. We don't do signal services. We don't do monthly subscriptions or anything like that. We've got an education program. We've got a community for those that go through our program, and the community is very, very successful, and it's a great place to be. So, if you are somebody that is, learning from losses, these are, the types of individuals that we can generally help. We can't help everybody, unfortunately, because we don't teach day trading strategies. It's a bunch of nonsense. It's get rich quick bullshit, and it's not something that we subscribe to. But if you're trying to fit, trading around a career or a business. Maybe you want to get away from day trading. Maybe you just want a bit more consistency. Maybe you want to learn and not just hunt around all the social media feeds, stock twits, and listen to all the nonsense. Those are the types of people that we can generally help. If you do want to take it a step further, just jump onto our website at honeystocks.com. Just click on join and give us as much information, and you will talk to me personally. You've probably understood by now that I'm very relaxed, very chilled man, and if you are somebody that genuinely needs help with your trading and you want to talk to somebody about it, I'm more than happy to chat with you. It's not a problem. So if you stuck around to the end, thank you very much for watching, and maybe I'll speak to you soon. Thanks.